Okay, all right. Good afternoon, ladies and gentlemen, and welcome to our webinar on private equity and venture capital funding for the green and circular economy. Before I introduce our host of speakers, I'd just like to make an introduction to MSFI. My name is Navina and I represent Capital Markets Malaysia, and the Malaysian Sustainable Finance Initiative, which is the organizer of this event, is an initiative by Capital Markets Malaysia and the ASEAN Low Carbon Energy Program. Before I introduce our first speaker, I'd just like to do some housekeeping and tell you a little bit about what the program is about. So can I get the slides, Michelle? Okay, next slide. Right, so today's session will run for 2 hours, and we'll start with welcome remarks, and then we have 2 presentations, followed by our sharing session, and then a panel discussion at the end. I'd just like to let everybody know that we are, the CMM team is all working from home, so if there are any technical glitches, I hope you will forgive us, although we have done this rehearsal a couple of times. If you'd like to ask any questions during any point of the 2 hours, you'll see that there is a Q&A button at the bottom of your screen. So you just have to click on that button and key in your question, and we will feed it to whichever speaker or any of the panelists at the last session. So I'd now like to introduce our first speaker. We're very honored to have with us today Puan Salma B. Muhammad Maidin, who is Executive Director for Market Development for the Securities Commission Malaysia, to deliver her welcome remarks. Salma, the floor is yours.
Thank you, Navina. Assalamualaikum and good afternoon, everyone. My thanks to Capital Markets Malaysia for the invitation to one of its flagship initiatives. You heard the Malaysian Sustainable Finance Initiative. This workshop that's being organized is bringing together 2 important aspects of the economy that has continued to draw mainstream attention: the private market space and the green and circular economy. There is certainly growing acknowledgement that we are in need of greater solutions to challenges that we are facing on the environmental and social fronts. In turn, many of the companies that are working towards providing these solutions are often in need of access to capital. This workshop is timely to move this important conversation forward, where focus on financial performance of an investment can be aligned to the wider impact of making such investments. We have seen that as economies mature, capital markets play an increasingly important role in financing economic growth opportunities, particularly in the mobilization of private capital. Capital markets are generally suited to finance more innovative and higher risk projects, and asset managers are well placed to tap into this growing interest from investors who are looking for both diversification and a desire for investment exposure in sustainable assets and activities. Principles for Responsible Investment (PRI) has defined responsible investment as the strategy and practice to incorporate ESG factors in investment decisions and active ownership. They have also quite importantly deemed that responsible investment is naturally aligned to private equity through its long-term investment horizon and stewardship-based style. This fits very well with the discussion we will have this afternoon, how the PE and VC industry can play a greater role in the financing of the green and circular economy. Evidence of this we have started to see in the last decade, global PE specialists launching sustainability-themed funds, where responsible investment principles are considered throughout the investment process, starting with deal sourcing, encompassing screening against ESG standards, to other components of the investment process, including investment decisions, ownership, and during exit. There are many instances of the GPs of the PEs working closely with management of the portfolio companies to manage their ESG strategies and plan the implementation process. The hands-on approach that the PE and VC industry bring to the portfolio companies is significant, considering many small and medium-sized enterprises may have intention to improve on their ESG compliance, but are unable to do so because of capacity and skills limitation. Funding continues to be a challenge for entrepreneurs and SMEs as their very nature are more volatile in terms of growth and earnings pattern. Access to the private market space will certainly benefit them as more PE firms embrace ESG investing and look to channel the significant growth in their assets under management into this sector. The assets under management has tripled in the last decade between 2010 to 2020 and likely to double between 2020 to 2025. Green companies and projects, as well as social enterprises in Malaysia, continue to rely on government grants and bank financing as their main source of funding. Given the various stages of these companies and their financing needs, the VC and PE firms can provide alternative financing. In addition, the ability of the segment to take on and manage risk is a crucial part of this equation. For the SC, the 5-year SRI roadmap that was launched in 2019 has recognized that the capital market plays a critical role to drive the SRI agenda, especially in making financing accessible to a wider issuer base. The SRI document is set with 20 recommendations that sets out our intention to prioritize sustainable investment. It details out our plans and efforts to achieve this objective. We want to see greater access to capital markets that can enable scale, financial discipline, commercial accountabilities to ideas and strategies. CMM, that is supported by the UK government's Prosperity Fund in organizing this workshop, have put together a strong lineup of speakers who will provide us valuable insights and takeaways. I'm certain you're looking forward to the presentations and discussions this afternoon as much as I am, especially on the opportunities it provides for businesses in new growth segments and employment creation that remains critical for the SC. Thank you.
Thank you very much for that, Salma. Next up, ladies and gentlemen, the Malaysian Sustainable Finance Initiative is fortunate to be supported by the ASEAN LCEP, whose delivery partner is EY. And it is my pleasure now to welcome Russell Marsh, Infrastructure Advisory, Strategy and Transactions Director for EY Singapore, to deliver this presentation. Over to you, Russell.
Thank you, Naveen, and thank you to the organiser of MSFI for inviting us to speak. As has been outlined, EY is a delivery partner for the UK government's ASEAN Low Carbon Energy Programme, and it's through that programme that we're providing support to the MSFI that encompasses a range of activities, including helping them and supporting them in putting on webinars such as today. Just if you bear with me one moment, I can get my presentation, share my presentation, and I can get through my presentation. Bear with me one moment. Okay, great. So as is outlined, I'm a director at EY in Singapore. So I lead the green finance work stream of the ASEAN Low Carbon Energy Programme, and it's that programme that is supporting this event this afternoon. So what I'm going to do for about the next 20 minutes is talk through why we're here today and why this issue of green growth, climate change, circular economy is important, and in particular about the opportunities that provides in terms of the amount of investment and the role of PE and VC in helping to provide some of that investment and finance to say the concept of green growth and circular economy. So I think what's really important to recognise is this is very much an opportunity. There's lots of discussion around at the moment in the market about the risk that climate change in particular is putting onto the financial system, and how that you have those risks from climate change knock on into the financial system and broader economy. It's also important to recognise there's a flip side of that. As we take action to tackle climate change and broader environmental issues, there's a big opportunity, both in terms of dollars of investment required and also in terms of the jobs that will be created as a result of that investment. And what this slide here shows is just gives an outline of one example or one estimate of that opportunity in ASEAN. This was by the ADB and was developed to look at the green recovery in Southeast Asia. There's obviously now a lot of focus on what happens post the pandemic, and how do we, to use the phrase, build back better? How do we ensure that there is, a green screen, if you like, through the investments that we're making to come out of the pandemic? And say this slide is one estimate of that, of the total opportunity, and this is just within ASEAN, in terms of the billions of dollars that would be needed across those 5 different areas. I guess not surprisingly, clean energy transition provides the largest of those, given the lot of focus at the moment on the clean energy transition, both globally and in this region. So I don't think it's surprising that that's the largest opportunity. But beyond that, you can see there are other opportunities across the different sectors, whether that's agriculture, oceans, urban development, etc., where there is an expectation there will be a need for billions of dollars of investment in those particular sectors. And again, this takes a little bit further and just looks at, again, where is this focus coming from? And we start to talk about what's called the circular economy, which is where you're starting to focus much more on things like reusability, recycling. So effectively, what you're producing is produced by what you used by the product you produced in the first place, and how you have that more circular economy. And there's a lot of focus now talking about circular economy, both from the investment side and from regulators. And there's a couple of examples here where you've seen both investors and regulators start to take a look at how they can promote and finance and move forward on the circular economy. I won't read all of these in detail, but I guess two things to pick up is obviously is the bottom left, where BlackRock have launched their circular economy fund, which is very focused on investing in businesses that advance the circular economy. So they will start to put a circular economy screen, if you like, across the businesses that they invest in. And then on the right hand side, where you've started to see, again, regulators looking to try and drive the circular economy, and in this case looking at the example of where the EU have a tax on non-recycled plastic packaging waste, and obviously that would increases the cost of using that as a material, and in theory that should help stimulate the investment and development of alternatives that say are recycled alternatives. So they're just a couple of examples of again how we're starting to see this focus on the circular economy. So again, taking that again a bit further and looking again what do we mean by the circular economy, the growth potential in the 10 key sectors. And I think again this kind of highlights what we were showing earlier, that you choose the sector that you're in, and there is potential for growth. In some, it's not necessarily as high as others. There's potential for growth in terms of the circular economy across a range of different sectors, whether that's as a result of innovation, innovation, corporate action. Again, if you talk on plastics, there's lots of examples of corporates themselves taking action to reduce the non-recycled plastic element of their products. In the power sector, there's lots of corporates taking action so how they can clean up their power supply. Say in policies and regulation, again, you've got the examples of where there is regulation and policies coming to tackle the issue about single-use plastic and non-recycled plastic. And again, if you're looking at the energy sector, again, a number of governments looking to increase the policies and regulations that drive the energy transition away to cleaner alternatives. And then on customer preferences and macro trends, it's clear starting to see a strong preference from consumers to buy, if you like, green goods, environmentally sustainable goods, be more aware of the circular economy, and that's a sort of macro trend. I think we're starting to see this big focus on ESG across the economy, across whether you're talking about finance or other sectors. This increasing macro trend of focusing on ESG. So again, I think it's just an example of where this issue may only be starting to be talked about. Certainly, circular economy is a relatively new phrase, but certainly it's one that's now started to be talked about a lot more, and that will only increase over the coming years. But then what are the barriers? So obviously, we talk about this transition to a green or circular economy, but what are the barriers to actually actually getting there. And this is some headlines from a study done by Standard Chartered that did a survey of large companies and investment specialists in terms of how they can the barriers to this transition. And again, I think not surprising that 60% of those from companies and 85% from those of investors agreed that a lack of capital is what they see as the biggest barrier. And I think that other one, around 97% of ASEAN companies, face serious delays because of the transition, compared to 85% globally. I think that just gives a sense of where we are in the region as a result of the pandemic, but also this sense that whilst there's an interest and desire to move to further towards net zero, being able to access capital to do that is a barrier at the moment, and certainly that means there is an opportunity in terms of providing that capital. And again, the slide outlines some other examples of the barriers that were raised by those companies and investment specialists that were surveyed. So how can, in this case, PE and VC seize this opportunity? It's clear there is an opportunity. So what does that mean for the PE and VC sector? So again, I'm looking at that financing gap. Again, another way of looking at this, this comes from the United Nations, that something like $3 to $5 trillion per year is needed globally to meet the SDGs. So I mean, I think there's an expectation that everyone involved in finance is going to have to play their role, and so clearly that would include PEs and VCs, and so they're likely to have an important role in closing that financing gap. And the slide on the left and on the right just again outlines where that opportunity is in terms of the identified need for finance and the identified financing gap. And I guess probably not surprisingly, it's the power sector, climate change more broadly, and transport where there is that biggest gap between what's required and what is needed. So we are starting to see, PE investors have an increasing demand for ESG products. I mean, interestingly, on the left, when a survey that was done by EY, looking around sort of PE investors' activity and demand for ESG products. On the left-hand side, pretty equally split in terms of PE investors that are already investing in ESG products, and 50-50 split about whether they think there's enough ESG offerings to meet your needs. So clearly there is an opportunity in terms of increasing the ESG offerings in the market, and clearly there is the opportunity to increase the number of PE investors who are focusing on ESG products. And again, on the right hand side, this shows you again in terms of how you expect ESG investing to move through the following asset class, and it highlights there in terms of the growth expected within the PE and the venture capital sector. Again, I mean, interestingly enough, again, taking that survey a bit further, I mean, I guess understandably, sort of asset growth still remains the top priority of the PE firms around the globe. And again, this is from the EY survey of 127 firms across the world, with a significant amount of assets under management. And on the right, it sort of shows what their top strategic priorities are. And I mean, ESG initiatives are the third in that list, behind asset growth and talent management. So clearly starting to see that the ESG, the integration of ESG within those investments is going to be is a significant part, and I think will continue to grow in terms of so certainly the PE sector. Again, at the moment, kind of got $9 trillion of funds estimated to be under management by 2025. About 7,000 firms currently operating worldwide, and we're going to see that tremendous growth in PE assets under management. Again, that's also an opportunity for those PE funds to be looking at, again, how they can support the circular economy, how they can support green growth, and say the energy transition, I guess, in particular. But how can they start to look at using those assets they manage against those opportunities for the funding that is needed to meet some of the objectives around the circular economy. So moving quickly closer to home, and sustainability is gaining some more traction in Malaysia. Some figures here around sort of total committed funds under management over the last few years, up until the end of December 2019, and I say a significant number of registered corporations, and on the left-hand side, and a significant amount of money that is invested in investee companies. So again, that's both seeing a sign that there's potential, lots of further opportunities for PE and VC to flourish in Malaysia, and to start to think about how it can integrate that ESG screening and the support of green growth and the circular economy through its operations. Again, there's some opportunities in Malaysia, some certain things the government's doing to incentivize particularly green technology and circular economy. I won't spend too long on this slide. I'm sure most on the call know most of this, but obviously Malaysia has a target to reduce its greenhouse gas emissions by 2030, and it's put in place a number of measures to try and look at that in terms of through sort of promoting renewable energy and through waste management. They have the green technology incentive and tax exemption, and then a focus on waste management activities as well. And then also, again, specifically on clean energy, have this 20% clean energy target by 2025, and so looking at green buildings and electric vehicles as part of that. So again, the Malaysian government has made it clear, that it wants to transition, it wants to reduce emissions and increase clean energy, and therefore, putting in place relevant incentives to try and do that, which again highlights an opportunity in terms of the investment in those particular sectors in Malaysia. This slide is just an example of how you can see a net zero pathway. So obviously a lot of focus at the moment on both countries and corporates going to net zero, and this is one example of kind of how you get from to a climate neutral scenario, what technologies you would need to do to get there. And I think that what's happened, well, the purpose of this is on the right hand side to show that there are technologies that we're going to need, so carbon capture, green naphtha as in examples, that aren't necessarily very well developed either in Malaysia or elsewhere, and therefore that's potentially a really good opportunity in terms of I guess particularly VC, but in terms of actually sort of seeing how you can start to invest in these technologies that may not yet be very well known or very well developed, but are certainly going to be needed as we get towards the targets for get towards 2050 and having to hit the kind of targets that people are talking about in terms of getting to a net zero pathway. And my final couple of slides, and again, I won't spend too long on them. You will get the slides afterwards, and we have got, say, 4 speakers after myself and Arena to talk about, give you some direct examples of their work in this field. But obviously, there's some examples of some funds that are looking to have their mandate focused on, I guess, like on green growth, circular economy, say Carbon Infrastructure Partners, and going back to what the slide I just showed, where they're looking at things like geological storage, enhanced oil recovery, hydrogen, all of which are technologies that are, at the moment, technically all of them work, but in terms of commercially and having them at a significant scale, not yet ready for the market yet. And again, just some opportunities again for those technologies to be taken forward through some investments. Circulate Capital, we're going to hear about very much in a moment, so I definitely won't spend any time on this slide. And then another one here, so it's the KKR Global Impact Fund, which again shows you how it is now looking to align its investments with ESG and green growth in terms of, say, particularly having those 4 criteria. So particularly looking at, number 2, which is contributing to solutions to SDGs, and to be seeking measurable improvements to ESG performance during the ownership of KKR's ownership. So just to get an example of where, say, a fund is looking, an impact fund in particular is looking to really drive and put its money into the sectors that will deliver, say in this case, solutions to SDGs, but they obviously contribute more broadly to green growth and the circular economy. So that's the end of my presentation. I hand back to Davina to introduce the next speaker and take us through the remainder of the afternoon. So that's been, I hope you found that useful, and so obviously happy to take questions at the end. Many thanks.
Thank you very much for that, Russell. And these are some great slides. Ladies and gentlemen, all of the slides will be made available on our website after the event, and we'll send you the link to that. Before I introduce our next speaker, we're going to run a quick poll, and I hope that all of you will participate. You should see it on your screen very shortly. Okay, so here's the poll question. As a player within the private market, how much of a priority is being placed on investing in the green and circular economy? The options are a top priority, an increasingly important priority, and the third option is there's no particular emphasis placed on green/ESG investments. So if you can just key in your answers, and we're just going to wait a few seconds for everyone to key that in. And I'm going to ask my colleague to share the results on screen. Right, so 24% say it's an increasingly important priority. 62% say it's an increasingly important priority, 15% say it's a top priority, and 23% say there is no particular emphasis placed on green and ESG investments. Thank you so much for participating in that poll. It's a really interesting result and encouraging as well. I'd now like to introduce our next speaker, Arina Kok, also from EY. And Arina is Director for Climate Change and Sustainability Services for EY Malaysia. Arina, the floor is yours.
Thanks, Navina. So I'll jump into the second part of today's discussion. It's going to be focused very much on sustainable impact assessment and how, most organizations who have been on the journey has matured over time. So if we look at, So if we look at what the shift has been in terms of the shareholders to stakeholder capitalism, which is gaining a lot of traction, there is an essential focus on how to measure the long-term value creation. Now, why is this important? Is because not just looking at financial returns, I think a lot of the growing investors are starting to see if this will actually provide them the longer-term returns, or in terms of ESG, what are the impacts and outcomes, and what are the risks that it actually outlines with. So if you see here, we can actually see that the large investors like State Street as well, BlackRock has been placing sustainability at the center of their investment approach, and it's increasingly becoming very integral in their portfolio development, and they're also looking to exceed certain investment or actually put a hard press direction to their investees on what their expectations are. And when we look at on a broader global scale where the direction is heading towards, the EU Commission has also established the EU classification system for sustainable activities, and they have also published a taxonomy regulation that actually talks about a classification system where it's an important enabler to identify what are the appropriate definitions to companies, investors, and policymakers on what activities can be considered environmentally sustainable, because this will essentially help to create a security for investors, to protect the private investors from greenwashing, and help companies to plan the transition, mitigate the market fragmentation, and eventually help shift investments where they are most needed. And in 2020, the EU Commission has further launched in-depth work to assess whether or not they should include nuclear energy in the taxonomy, environmentally sustainable activities. So there are quite a number of advancements from that side. Hong Kong Stock Exchange has also published their guidelines, which will be effective 1st July 2020, to mandate improved ESG disclosures in the bourse, as well as the Shenzhen are expected to follow suit as well. When it comes to our local landscape, if we see Securities Commission, they have issued the Sustainable and Responsible Investment SRI Sukuk, which actually SRI roadmap for the Malaysian capital market to guide the acceleration growth in the sustainable investing. And this is actually to drive the sustainable finance further. So the recommendations in this roadmap will explain the range of expand the range of the SRI issuers, as well as the investors, instruments, issuers, investors, and what are the services, while strengthening the disclosures and the governance. For Bank Negara, they have issued the value-based intermediation, which aims to reorient the Islamic finance business models towards realizing the objectives of the Sharia and generate possible sustainable impact to the Malaysian economic through the practices. The OECD has also had brought together leaders from the private sector and government, trade unions, to actually explore the changing role of business in the solution to strengthen the trust. Now, when we look at the PE and the VC, who are also on the verge of becoming the leaders in ESG adoption and reporting, what are the key aspects that they are actually focused on? So most of them are essentially moving towards the PRI Principles for Responsible Investing that was actually launched in 2006. So today there are more than 700 signatories that actually manage the PE assets under its working guidelines. These are the 6 critical principles, essentially to integrate ESG into their investment analysis, where they will also be active owners that and drive ownership policies and practices. And they will also be pushing or seeking appropriate disclosures from the entities that they invest in. And when we look at, on the left-hand side, the total cap is US dollar 715 billion, where we also seen an increase in impact investing market with a 43% increase since 2019 due to the large influx of impact-focused limited partners. So venture capitalists are actually under tremendous pressure to actually drive more socially conscious, to push them to prioritize mission-driven startups. And in terms of the startup side, the venture capitalist space are getting more crowded and competitive, because many promising startups can actually choose which investors that they want, and they can actually select those partners, based on the dedicated or public purposes. So at the same time, when we look at the market landscape, companies are staying more private longer, and they're providing a bigger window of opportunity for VCs to influence the achievement of impact within their portfolio. When we look about impact in this spectrum of responsible investment, the challenge is essentially how does this value measurement frameworks have been introduced, adopted, and how business communities have converged around the standards. The key challenges is with the ABC soup of ESG arbiters. You can see that there are quite a number of frameworks that has been driving the measurement matrix of how value or ESG impacts are being measured, be it the UN SDGs, the GRI, the value-based intermediation, and as well as you have other PRI and FTSE for good ESG rating models as well. So if we look at the spectrum, there has been a clear shift from philanthropy. There are also, shift from conventional financial investings and moving towards the social impact investings and the SRI, which are the ESG investing spectrum. So the purpose of, having this consideration essentially is to fundamentally look at how do you measure the value. Now, when we talk about evaluating ESG and measuring, how value are being created, investors are also now facing the challenge of how to evaluate more growing company generated data. So this includes the likes of the sustainability report. So if you look on the right hand side, there are use of ESG scores or rating. And if we look at the source of information ranking, corporate ESG ratings are the ones that are the most go-to document, followed by direct engagement, sustainability reports, and other ESG information. On the left-hand side, essentially, is in order to drive how this ESG valuation is being done, is to integrate it within the portfolio management and investment decision. So what are the various mechanisms that we've seen in terms of current industry practices, which shows these are the various aspects and ways to actually integrate. In terms of the research, it focuses on the quantitative analysis and active ownership, and this includes, for example, like red flag indicators, identifying what are those with high ESG risks, what are the watch lists for securities with high risks for regular monitoring. In terms of active ownership, is voting and shareholders or bondholders resolutions. In terms of security level, there's also increase in terms of equities where there are adjustment of forecasted financials based on the expected impact of the ESG factors. and how these adjustments also impact the valuation model, and what are the various stress testings or sensitivity analysis that are being done for the portfolio level. So in terms of the security level, in terms of fixed income, there are also infused of internal credit assessments on the issuers based on ESG analysis. There are relative ranking based on that, as well as value analysis, and the duration are actually getting broader in terms of how you assess the impact of the ESG issues. So for portfolio level, the risk management, portfolio construction, as asset allocation are the three key aspects that we've also seen. For the risk management, essentially, it's also looking at the value at risk, including on how the ESG analysis impacts them. And in terms of the portfolio construction, there are adjustments to weightings of companies, sectors by sectors, countries, currencies, in how it mitigates the ESG risk exposures. For asset allocation, is looking also at different ESG scenarios. For example, the objectives, inclusion of ESG objectives in the strategic asset allocation or in the tactical asset allocation to mitigate the short-term ESG risk. So when we look at the what are the explicit and systemic inclusion of ESG factors within the investment analysis and decisions, these are the examples of how a mature practice for ESG integration essentially looks like. When we look at the structured approach, essentially there is a dedicated ESG team within the investment and outside the investment, as this is the value creation partner to actually drive the seamless integration. There are investment process bottom up and top down. Bottom up being, where the investment team has a major role, and they are the first point of reference, and top down is where the team provide the macro view of ESG and the potential portfolio implications. Other than that, there are various operating models. For example, having multi-source and proprietary scorings, looking at various incentives and data sourcing. There are also ESG KPIs that are being developed that is also in line with how they actually integrate ESG within the portfolio level, and how it actually identify what are the top scores for some of the projects, funds, and products. So in summary, when we look at the leading practices, the ESG teams are being the team that actually support the integration of ESG into the organization. They are the center of consideration, center of excellence, and share all these ESG practices and the go-to to actually get more technical support and details. However, when we look at the responsibility, it is essentially driving a more firm-wide ESG strategic intent and ambition, and it's also to support the various parties to actually drive research and sourcing. And they will essentially be developing material to help coordinate, what are the proxy voting and engagements, and coming up with further capability building. So what are the various types, the various types of a sustainability assessment that have been developed globally across these years? On the left-hand side, in terms of topic specific, under the environmental, social, and governance, we can see there has been a number for environment. We have also Equilibrium AP on the social, as well as Glass Lewis on governance. On the right-hand side, the comprehensive ESG has also a number of assessment that are being there. We have the Bloomberg, we have the FTSE, and MSCI. But the question that we almost get pretty much by all the institutions is, which are those that are most critical and important? So if we look at what are the purpose of this ESG and investors rating, what are the factors that actually make a good ESG rating is, it has a broad coverage across sectors and geographies. It does have a certain level of quality of methodology and articulation, and they actually do provide assessment of how they actually drive those methodology. They will also have a certain level of experience in the research team that are specialists in some of these ESG areas. And when we look at how investors use this rating, essentially is to provide information or data material to the performance, as well as supplement the research on what the organization have done internally in their ESG. So in terms of the ESG criteria, that helps investors to identify and understand what are the financially material ESG for risks and opportunities, whether this should be integrated, these are the various sources of use that actually you can also refer and go to. I won't go through this in detail, but you can actually go to these various sites as well for the level of detail. Now, I would like to then move on and pivot to another topic that is very critical in terms of sustainable finance, as well as how gender actually essentially is critical in the factor of ESG, and it can essentially be key fields of play that helps investors to spot risks and opportunities. So by bringing the climate gender and the gender lenses on the investment decisions, you can actually see there are various potential to increase the returns or impact investment. There are 5 reasons to actually bring this gender and climate together. The first one is finding new investment opportunities. And the second one is mitigate risk. So when you talk about integrating gender and climate investment approach, we have seen quite a number of women innovators and entrepreneurs that are creating disruptive solutions. We have some examples later to share. And in terms of addressing the gender in the products, that would also unlock products and services that are more responsive to the market needs. And when you talk about mitigating risk, it can't be just climate risk cannot be just mitigated in a diverse way. It does affect businesses, whether directly via customers, suppliers, or stakeholders. But the key thing is when we look at the solutions, it can be, it can be a gender smart and climate smart investing that provides ways to mitigate this. And it also can be considered looking at where are the targeted vulnerable groups when actually looking at gender smart and climate smart investings. So when it comes to driving long-term value, a gender and climate smart lens can essentially help to drive the competitive market advantage. And what are the long-term values across the talent, innovation, markets, products and services, value chains, and governance. So these are essentially bringing climate and social impact, to the mainstream thinking of the regulation policy. And what are the implications of those that fail to actually adopt, this risk and consider this risk? How do they actually then look at the potential impact of potentially having this to be managed? So when we look at the gender smart climate investings, what are the various opportunities and what are the key areas of fields of play? It comes into many flavors and different colors. When we look at entrepreneur, there are areas where, as I mentioned, there are entrepreneur, particularly women of color. The other questions is, when we look at leadership, the questions there is, are there diverse stakeholders consulted and are women at the table in decision about site selection and environmental impact? When it comes to product development, the question is then, how does the design and marketing of products and services respond to differences between women and men's use of products and services? In terms of consumption, how is gender lens being considered across your sales and marketing pipeline? Is this leading to smarter consumer segmentation? And in terms of the supply chain, manufacturing, and employment, it essentially, by considering the gender lens, will also provide a tactical and strategic direction to actually look at where are the areas of needs as well as where are the areas of demands as well. So 2x challenge is essentially a commitment led by DFIs and a framework to assess gender factors in an investment area. These are the 5 categories that actually has been considered for women and where when looking at these 5 key areas is essentially to also consider, for example, as entrepreneurs, how are the supports being done in terms of driving them in the lens of the gender lens, where it can actually promote women entrepreneurs as role models. In terms of leaders, it can actually promote women business leaders in the role models. So when we look at what's the context of PE and value creation, the fund managers guides is into gender smart investings. The IFC and the CDC group has came out with certain guide and also directives on what the gender smart investment strategies are. And it's essentially outlining that PEs can actually play this catalytic role in closing the economic gaps and between men and women. And in terms of the business case, it can prioritize gender equality. And this essentially, other than climate change, the gender equality is going to be one of the key focus areas of our decade as well. So the guide actually combines learning from this CDC and IFC's experience with over 160 fund managers. It does provide, what are the business cases to prioritize, and it is very helpful to build an overall business strategy as well. So if we look at what are the gender smart investing framework and what it entails, I won't go into detail, but on the left hand side, how it's being driven is from the firm level, that where it strengthen the diversity at the firm level and implement a firm-wide gender strategy. And on the portfolio level, on the flip side, is to select gender lens in their investment strategies, apply gender lens and measure what are the value and outcomes coming out from their gender lens portfolio management. So in terms of going to case studies on impact of selected green or sustainable funds, we actually would like to take a look at one of the case studies. So this is actually 3x5 Partners, where they have invested in breakthrough venture companies who have developed solutions in the global health and climate challenges. So what happened in this example is 3x5 Partners actually invested in smart wires in 2011. They funded the entirety of the financings from the incubation from the university technology transfer startup to a full growth company with a utility grade product. So over the last 10 years, they have actually commercialized its power flow control technology to help grid operators unlock large amounts of spare transmission capacity and transmission of renewable energy. And since 2011, they have actually helped Smart Wires to raise US $240 million, and have actually also helped them to grow along the long utility sales cycles and supported the technological advancement. In terms of the what about what they are, I won't go through on the right hand side, but I would like to point a focus on how impact performance are being tracked and reported publicly. They actually outline 100% of the AUM are impact investments, and they actually you report on the outcome where how they address the climate change, what are the increased access to healthcare services and improving health, and what are the increased access to water and sanitation. And they also outline the secondary impact, which is essentially, as I mentioned, to address the gender inequality as well. Now, in terms of the next case, we come to Circulate Capital, where they are dedicated to finance innovation, companies and infrastructure that prevent ocean plastic and advance their circular economy. So what they have done is they invested in Lucro Plasticycle, a homegrown Indian manufacturing company specializing in recycling difficult to manage flexible plastic for its own production for sale as high quality commodities to other facilities across the country. Now, part of Lucro's expertise was in the industry-leading plastic e-cycle process, which it buybacks and recycles from customers into materials for purchase from these companies. Now, being involved in every step of the process, Lucro was able to create a circular economy for plastics, and this also helped support the livelihood of local communities and provide, the reliable income for the informal sector. Now, again, I wanted to bring about what are the impact performance that they have actually reported. They actually talk about, how they have created jobs, what are the access to financial services, how do they conserve land ecosystems and natural resources and address the climate change and environmental issues. And the secondary impact is essentially elevating poverty and also address the gender inequalities. So the third and last slide that I have is essentially for responsibility, how responsibility is actually making their access to clean power to fund the gender smart investing. So this is a leading Swiss sustainable asset manager with over 3.5 billion in assets under management. What happens is they brought into action a growing commitment on gender in their firm, and they embarked on a pilot to apply gender lens in private debt fund, addressing the lack of access to clean power, primarily in the sub-Saharan Africa and Southeast Asia. So they work with leading impact and gender advisors, Catalyst at Large and Sagana, to create a tailored gender smart investing roadmap, toolkit, and training to promote this gender equality. And as a result, the fund has qualified for the 2x challenge and is now engaging with their investors' portfolio to create the gender equality and better business outcomes. So I will pause there, and perhaps Navina, I'll pass back the floor to you.
Thanks very much for that, Arina. That was a wonderful presentation. Ladies and gentlemen, just to remind you that these presentations will be made available on our website. I've got quite a few texts from some of you asking about that. And we will send you the link to the website after the event. Now, before we get into the next segment, we have another poll question that we'd like to share with you and seek your feedback. And just going to wait for it to appear on the screen. Okay, here it is. So prior to this webinar, were you aware of the Green Investment Tax Allowance and Green Income Tax Exemption offered by the government of Malaysia? So your choices are yes, no, had heard about it, but did not know the details. So we're just going to give you a few seconds to answer that. And I'm going to get my colleague to show you the answers. Okay, so 47% of you had not heard about it, 21% of you have, and 32% have heard about it but did not know the details. So this is in this was in Russell's presentation, which will be available on our website. Next up, ladies and gentlemen, we come to the second segment of our program, and we're really excited with the lineup of speakers that we have to present. These are PEs and VCs who have invested in the green and sustainable economy. And it's a series of 4 presentations, which will then culminate in a panel discussion. I'd like to now first invite Dr. Bo Bai, Chairman and Founder of the Asia Green Fund, to kick off the presentations. So Dr. Bo, over to you.
Sure, Navina, thank you so much, and then really appreciate the introduction, and then happy to be here to share our experience over the past few years. So let me first, need access to be able to open up my presentation right over here. So really just to walk through a little bit how we have been doing impact investing over the past 5 years. Asia Green Fund, we were established around 2016 and really have been practicing trying to become the pioneer investor in the impact investing scheme in China. What we saw 5 years ago, and then we continue to see, is the opportunity universe is going to be fantastic. Russell mentioned that $3 to $5 trillion of investments will be needed over the next decade, every year. And then really what we saw was the carbon neutrality objectives announced by various leaders in US, China, Japan, Korea, have all been driving a lot of demand for investment into those areas. After 5 years, we have around $2 billion assets under management. The first one is a direct managed US-China Green Fund 1. We also have a joint venture with the Bao Steel and the China Merchants Group, and also a joint venture with the Three Gorges Group on green investment infrastructure. Really, what we have been doing is trying to combine the industry knowledge, the technology know-how, and then the financial support in order to try to drive this carbon neutrality efforts through whatever we do in all these areas. It was quite interesting to see Ernst & Young's presentation regarding various private equity investment practice in ESG. We position ourselves as an impact investing, and one thing after 5 years effort, I have to say is this ESG team that Arina mentioned a moment ago is absolutely critical. But for an impact investing firm, ESG team is everybody. What I mean by that. And remember, as a fund management company, the top priority is our fiduciary duty. So if you want to become an ESG or impact investing, this really starts from a fundraising effort that you need to be aligned with your limited partners. When you go out there write your pitch materials, presenting to the limited partners to raise money. You want to make sure that your limited partners sign up for you to pursue impact investing, which means every investment that we do will try to achieve both financial return as well as a quantified environmental impact or ESG impact. So that really starts from the fundraising, and then you have this top-down in terms of sector selection to be able to find the sectors that will be able to combine the technology advancement as well as entrepreneurism to make that happen. And then in terms of the due diligence process, you really have to quantify not only the financial risk reward, but also the environmental risk reward, which means in your stress testing of base case, upside case, downside case, you're not only trying to calculate how much IRR and ROI that you can generate from this investment, but also what amount of carbon emission reduction, hazardous waste treatment that you may be able to generate from that investments, not last year, but also over the next 3 to 5 years, because all these are tied to the operational KPIs of your financial and environmental due diligence. And most critically is that in your investment memo, in your investment committee, that risk reward on both the financial and environmental needs to be part of the decision making, which means that sometimes as an impact investor, even if there is attractive financial return, are you willing to walk out of the transaction if there is insufficient ESG investment opportunity? So that needs to be in the investment decision making. And then after that, a big part is really reporting to LPs on what you do. And we are actually the first Asia private equity firm to do this on a fund level. Every portfolio company that we do, we work with within our team, as well as work with the third parties in order to quantify the standard of what they have achieved. Arena talked a fair bit about the whole soups of various green standard, and then we absolutely need to avoid greenwash. So the best way, in our view, to avoid greenwash is to quantify and certify. So we work with firms like Bureau Veritas and DNV for them to work with our portfolio companies, every one of them, to quantify and certify how much emission reduction, how much water discharge that they have alleviated through their activities. And then we aggregated them together to report to our LP. Following a couple years of practice to LP, we actually publicly published this carbon neutrality and green impact report 2020. You'll be able to see that on our website as well. So really, in last year, through our investment of our main fund, we mitigated 2.6 million tons. We also developed certain metrics to see how well our money was spent, in addition to the financial returns that you can see on the right-hand side. But really, every 100 million RMB of investments we made helped 172,000 tons of CO2 emission reduction, and every dollar of investments we did avoided environmental cost for the society by 0.36. So these are the numbers that we quantify. The beauty of an impact private equity firm is this is not a one-time efforts, and then given that we invest in the growth stage companies, as this company to grow, as you can see, our joint CAGR is usually around 40 to 50% year-over-year growth. As this company to grow on their financial side, their environmental benefits, environmental effects also grows substantially. So this is a number that every year we report on the right-hand side, the financial result to our LPs, on the left-hand side, our environmental result to our LPs. So as we continue that efforts, what we have seen again and again is technology making a huge impact. In Beijing, our portfolio company converted all roadside parking and the traffic jam through AI-based technologies, and so everything is automatic to reduce the traffic jam issues. And we also own the second largest electric scooter battery swapping infrastructure in the country. We acquired DuPont Clean Technology for $510 million together with the Saudi Arabia Public Investment Fund. And we have seen tremendous amount of opportunity how bio-based processes are particularly benefiting from the gene sequencing over the past decade, how that is changing the whole chemical and materials business. So really, it's a lot of those opportunities going. Russell's presentation talked about how much capital is needed. One thing we see again is a lot of assets, a lot of infrastructure requires a lot of capital as we move to a more sustainable economy. So in Singapore, with the wonderful support from Singapore Monetary Authority of Singapore, MAS, we launched a digital green exchange that will essentially allow those green infrastructure projects to be able to issue a more digital security, a digital token to attract a lot of international capital to support that. We have been we got the license and then really building and then NASDAQ has been working with us since 2 years ago, really to build up a top-notch world exchange to build that. And one thing, when Arina mentioned about all the green standard, peel the onion, what we found the simplest and the easiest to start with is carbon. So every assets, when they want to do digital asset-backed security on our exchange, we will want them to have a certified carbon emission reduction value as well from DNV, BV, the world, and then building upon NASDAQ technology, we allow all those carbon emission to be tracked from issuer to investor, and then from investor A to investor B. So we're essentially the first exchange to realize that carbon disclosure on both the issuers and investor side. And certainly it is something that can be expanded in the future, but I think this is something now with this type of characteristics, and then will allow a lot of international capital, particularly in EU, in US, that are very keen to own green assets, but not only just following all those, MSFI and Reuters, Bloomberg Green Standard, but really to know that if they own this portfolio of assets, how much carbon dioxide emission they have helped this year. And those numbers, we need them to be quantified and certified. So we're creating this just as a platform to really do more and more impact investing to attract international capital to support these projects. So I just stop here, and I'm very happy to be able to share with everybody what we do at both the Asia Green Fund and the Cyberland Tech Exchange. Really use impact investing to drive sustainable development. Thanks.
Thank you very much for that, Dr. Bo. So please stick around because you're going to be part of the panel session after everyone has presented. Ladies and gentlemen, before I introduce our next speaker, I just want to remind you that if you do have questions for the panel, please make use of the Q&A box and type your questions in there, and they will be brought up during the panel discussion. Next up, I'm very pleased to welcome Faris Zahir, Chief Executive Officer of Zariah Capital. Faris, the floor is yours, and we will begin sharing screen for you.
Thank you. Thanks, Navina. Firstly, I'd like to say thank you to Capital Markets Malaysia and MSFI for inviting me to speak today. Very interesting talk so far, Dr. Bo and everyone. Thanks very much. Was very intrigued by what you have shared. So maybe just a bit of an introduction on Zariah Capital itself, because it gives a slightly different perspective to maybe what the presenters had presented so far. So Zariah Capital, we see ourselves as a global life sciences investor and investing in relatively early stage companies. And that in itself, I'll get back to in a minute, but it has some challenges to some of the things that we've discussed before with respect to quantification of things, with respect to certification of things. Nonetheless, there's a few interesting things that you would get when you invest slightly early stage than you would later stage. So we'll get back to that. But again, we have a team of 18 professionals. We manage $500 million US under management. So we early stage 500 million is a decent size. Of course, if from a PE perspective, that's pretty small. And out of that 500, I guess our one of our funds, it's about 150 million, focuses on non-healthcare. I think that probably has a greater touch point to sustainability, and I will touch on a few of the portfolio companies there, as we walk through the presentation. We look at about 400 odd deals globally a year, and I think from there, it's pretty much a global representation of things that we look at. We'd like to say that we have a class-leading Sharia compliant venture investment infrastructure. So we do that as well, if and when that's required. We are PRI signatory since 2018. I think there's essentially three classes. You could be asset owners, managers, or service providers. So we come under manager. Our domain expertise is in life sciences. Life sciences, I think, is mostly associated with healthcare. But it's not just healthcare, it also includes other areas, and I'll touch on that in a sec. And in terms of the investment strategy itself, maybe I'd share a little bit on that. So we have a strategy that looks at deals globally, and the deals that we like are the ones that have breakthrough sort of innovation, game-changing ideas within the companies itself. And people that we back that are very hungry to see those ideas come to fruition. So those are the kind of things that we scout around for, and we build. We call it build value locally. What it is effectively introducing cross-border type opportunities to the portfolio companies, whether it is involving partnerships, whether it is coming up with ideas in terms of how they could improve costs and so forth. So that's a brief introduction on Zariah Capital, and we have some slides just to share with the audience today in terms of our thinking on the topic, which is sustainability or green growth and circular economy. If you go to the next slide, please. So life sciences. We think it's exciting. We think that over the next decade, there's going to be a lot of things that will come out in this sector. And there's just all these advances that's happening within the tech side, within the sciences side, engineering, and overlay that with sustainability that's become more important these days. And the market demands and so forth. So we think there's going to be a lot of excitement over the next decade. So this slide is to show that if we look at how things were 10 years ago, it was the oil economy, oil and gas companies that dominated. They were the largest companies in the world. And if you were an asset allocator, you'd kind of put more money into the same, thinking that you'd probably get the best returns because those companies got there for a reason. But if you look at today, it's really the tech companies that dominate. And 10 years ago, instead of looking at, say, risk return, the other metrics, at least we would argue that the tech companies have, they have some unfair advantages that other companies didn't have. They had advantages on cost, they had advantages on programmability, i.e. it's just easier to scale the businesses. And when we look at those characteristics in the life sciences side, we see very similar characteristics. In fact, we don't have the slides here, but if you were to do some mapping of some of the cost improvements within the tech side versus, say, some of the life sciences side, it's actually tracking better than some of the tech side. And in terms of programmability, if you think about the supercomputer, which first came out in the 1960s, that same power, making it available on your desk, to your palm, that kind of steepness or improvement of that power is not as steep as you're seeing within the life sciences side. In the case of gene editing, for example, you have Ginkgo Foundry that was up there in 2010. We have a portfolio company called Inscripta that will give you that same power. In fact, this year they're rolling out a benchtop and a powerful machine. And I think Dr. Bull also mentioned in terms of the power of some of the gene editing thing that's happening out there. So there's various examples that we can give, but those are kind of two anecdotes that we argue we probably see a few more exciting things happening on the life sciences side. Next slide, please. So again, I mentioned life sciences is normally associated with health sciences. So effectively, the tagline is we heal the world, we fuel the world, we feed the world. Healing the world is more associated to health sciences, fueling the world by renewables, biofuels, and feeding the world on ag tech. So I'll focus a bit on the other two, which isn't not normally associated with life sciences, but we certainly do, and we come up with some examples of how we've done it. And if you think about the sources of greenhouse gases out there, there's a bottom, the pie chart there. 73% of the emissions are coming from the industrial side, 27% coming from the ag side. I think, maybe there was a mention in the EY slide that agriculture is also important, but perhaps from a wider type of audience, not many people are aware that there are a bit of emissions coming from agriculture. And if you look at the left-hand side of that slide, i.e. marked against, say, transportation, marked against heat and power, one thing that's interesting is that ag emissions are about 2.5 times transportation, 1.5 times heat and power. So we'll touch a bit on the ag side with respect to this presentation. Next slide, please. So one of the things that I thought I'd share with everybody here today. So the ag tech deals that we're seeing, it's clearly increasing significantly, 20 billion in 2020. And in terms of related to climate change, that's about 5 billion. If you look at the bar chart, there's a disproportionate increase in 2020. I think we probably will see that continuing on to the next decade or so. It is become quite important. I think the various presentations before me today also showed similar kind of data. And the investment in digital ag, we think is going to be important against the confluence of those things happening on the tech side, things happening on the science side. It'll be interesting companies coming out with those type of combination type technologies between the tech and the science side, and they would be very, very useful in terms of improving productivity, efficiency, in terms of farming, agriculture, and so forth. Because if you don't really need to put as much fertilizer than ordinary, there's a lot of savings, a lot of need to or exposure to chemicals to the environment. So it has that impact in terms of improving in sustainability. Next slide, please. Thanks. So this is the last slide. It's just to share some of the portfolio companies that we've invested in. So there's a few. Obviously, this is not the whole universe. And again, for the purposes of this forum, probably won't go into the details of each and every single one. But we'll go through maybe a couple just to get a feel of the companies that we invest in. So LanzaTech. So LanzaTech is an area of biorenewables. So when we first invested in it, fairly early stage, they had a technology that could convert carbon, effectively carbon monoxide, and convert that into ethanol or into fuels. So it started off as being, well, let's see whether this technology can work, to one of a company where the technology is being adopted. As we know, the biggest emitters of carbon monoxide amongst them would be steel companies. So some of their clients are now steel companies. I think Bao Steel is one of them. In China, there's a few others that's effectively adopting their technology where it captures their carbon and converts it into something that's, i.e. renewable fuels, to the point where they've produced enough jet fuels that could, they did a flight, a Virgin Atlantic flight going from Gatwick to Orlando in Florida with renewable jet fuel. And I think LanzaTech has spun out a company called LanzaJet that specializes in using its technology in producing jet fuels. LanzaTech itself can produce other fuels, but that specific subsidiary produces jet fuels. And I think Shell are amongst the bigger investors in them. So wish them well. We've had a nice financial return in our investment, but more importantly, it's not just about financials, but about the impact that that they would make to the world. So we're happy with that one. A few other companies here on the ag side. Let's see. Well, Greenlight is an interesting company. I think it has a technology that can produce RNA using a proprietary cell-free bioprocessing platform, i.e. produce RNA very cheaply. Why I thought I mentioned it because I think most of us have heard about vaccines using mRNA kind of a platform. The applications in agriculture is also there. You could do double-stranded RNA and produce pesticides in the way that Greenlight does. And what it is very, very specific to a particular pest, and therefore vis-a-vis the current standard practice where you spray chemicals out there, killing not just the pest that you intended to kill, but all those that you didn't intend to kill, and the emissions and all that associated with it is a bit more problematic. Whereas they've come out with a solution that's more environmentally friendly and more efficacious in that sense. Some of the other examples include Inscripta, the company that I mentioned earlier. They do gene editing and they've produced a benchtop. They should be made, it's available out there, and the more and more of this being available, access to this type of technology would allow more innovation, more discoveries of other things, that you could do. Amphora, I guess, is the other company that has used a bit of the Inscripta technology to have a platform where they can tweak a crop that can produce a lot more protein versus a carbohydrates. And with that, it's a play on the plant-based type protein, which is, we have companies like Impossible Foods and so forth. They would be a very interesting company and feed into that space. Maybe not touch on ProVV. I guess the last one I'll just touch on. So ProVV is a company that produces pheromones. Pheromones, the science is pretty solid in terms of what pheromones can do. Effectively, pheromones are secreted out of female insects to attract male, and that's it's kind of known out there, and it's kind of known that if you use pheromones, it's one way to disrupt mating as a way to control pests. The issue is it's just too expensive to produce pheromones, and until ProVV came out with its proprietary technology. It's a Nobel laureate type based technology that's able to produce pheromones at commercial scale. So we happy that they've done nice trials in Brazil and I think Indonesia as well. And the idea there, again, it's similar to Greenlight, i.e. Looking at more bio-based, environmentally friendly type of solutions to replace the existing chemicals that's widely used and that's more harmful to the environment. So I'll stop there, and I think we have questions at the end, and I'll pass back the mic to Navina. Thank you.
Thanks very much for that, Faris. That was a great overview of the companies that Zariah is investing into. And yes, we'll wait for the Q&A section to hear more from you. And next up, ladies and gentlemen, we have Regula Shag, who is Managing Director Asia for Circulate Capital. Regula, the floor is all yours, and we'll wait for you to share your slides. Great.
Wonderful. Do you hear me well, and do everyone sees the presentation?
Yes to both.
work, right? Well, first of all, thank you so much for having me to Capital Market Asia and MSFI. Really pleased to be here and build on what we heard from Ernst & Young, from Russell as well, to really talk a bit more about Circulate Capital and our approach to the circular economy. Circulate Capital is a Singapore-based impact-driven investment management firm, and we focus with our first product on really preventing ocean plastic leakage, and with that particularly also focusing on advancing the circular economy within the plastics industry, as well as be a catalytic force to attract more capital into the industry. And I will go into that in more detail, and where we see there is a significant lack, but also a significant opportunity to actually invest in the circular economy in the plastics industry. Let me just see. So, as an investment manager, we focus on investing in startups, organizations and SMEs in South and Southeast Asia, which are really dedicated to preventing plastic leaking into the ocean. And that in particular means bringing plastic back to the circular economy and put value to it rather than considering it as waste. We focus on land-based solutions. Once the plastic is in the ocean, it is very difficult to actually retrieve the plastics, as well as really benefit from its economic value. Just generally looking at what does that mean? I mean, I'm sure we all seen it, we all heard it, but waste is really now an international crisis. And particularly during COVID, with the lockdowns, the increase of particular single-use plastics has increased significantly. At the same time, however, waste management recovery has not been, in many countries, has not been considered an essential service, and the recycling component of that, and therefore we have seen a significant increase of waste produced but not properly disposed and or brought back to the economy for recycling. Right now, there is about 150 million tons of plastic in the ocean, and research says that it's growing by about 8 million tons every year. If we tackle the issue and want to significantly reduce the continuous leakage, then we can really focus right now alone on South and Southeast Asia, and by that actually have the opportunity to reduce the leakage by about 45%. So this is really by focusing on investing in infrastructure and manufacturing and processing capacity, as well as innovation in China, Indonesia, the Philippines, Vietnam, and Thailand. Our fund's objective or focus is really on the four ladder, with India and Indonesia as two key contributors to ocean plastic leakage, being as a considered primary country for us for investments, and then followed by the Philippines, Vietnam, and Thailand. I think these three markets are more nascent than India and Indonesia, and we can talk about that in more details, because ultimately, while processing or recycling of plastics in general is manufacturing and technology is out there, but actually the local context is very critical in ensuring that it's economically feasible to do so. When we look a bit on the, sorry for that, the actual problem we see with, if we don't address the issue properly in the years to come, is that we see tremendous costs to the economies in South and Southeast Asia. They are estimated of about $10.8 billion of loss in the tourist, fishing and shipping industry in Asia Pacific annually. There's about a $13 billion damage to the marine ecosystem, which you all know just by the sheer fact that we're seeing the beaches filled with plastic. But that's just one part of it, right? We have microplastics in the ocean, which then eventually also goes back into our bodies, and we see significant health implications that might bear. Up to about 95% of the plastic packaging value, so all up to about $120 billion is lost because it's thrown away after its short first use in such a short life cycle. Single-use plastic is really the big problem we see. And within single-use plastic, particularly the flexibles, the sachets, flexibles, which has lower value than the rigid plastics like PET bottles, and therefore is not collected. And ultimately, we're talking about $100 billion of annual financial risk for businesses if governments require them to cover waste management costs at expected volumes and recyclability. So there is a tremendous opportunity to help solve this issue. There is definitely a tremendous opportunity to also invest for venture capitalists and private equity firms. Once you see and capture the economic value of plastics. And we've seen some of them also in the early presentations by Russell, that once you tap into those areas and build a circular economy, that there is tremendous opportunities. However, and that's the biggest gap we're trying to fill with our funds, is that at this point, institutional investments are hardly available in the industry. And we really need to start attracting institutional capital into the circular economy, particularly the circular economy of plastics recycling. We saw that, and Russell had even more impressive numbers looking at the sheer potential the circular economy has in South and Southeast Asia. Statistics we've looked at, or it says that in the next 20 years in Asia, as an economic powerhouse, there's about 300+ billion economic growth. Obviously, millions of jobs, which are certainly very much needed, green jobs, interesting jobs for the youth, and obviously the elderly for us as well. There is tremendous opportunity, particularly in the cities where we see tremendous piling of waste and lack of infrastructure, which has to be tackled. Coming back to now exactly what we see and what we want to bridge is really the disconnect between the capital in the markets and the businesses. Today, still the majority of the capital from the capital markets goes into the industry of virgin plastics and neglects the investments of recycled plastics. The technology is there. You can actually take a PET bottle, recycle it, and make it food grade standard to put it back into a PET bottle. So it's not a matter of it's not possible, it is possible, but the capital has to be injected. Why has there been such a gap of or the neglect of the industry, not only in Southeast Asia, but in general globally, is because there is no evidence-based track record. It's been an industry which has been generally neglected, and therefore, we need now to build pipeline of investment opportunities. We also need to showcase that there is a return to be made by doing, focusing on ESG as well, build these evidence-based track records for institutional investors to come in, and then also make sure that there are more and more investment vehicles which allow actually investment in the circular economy. In my case, in particular, the plastics recycling and material recovery industry. But so there is really where we are stepping in into the missing middle in investing in companies in growth stage, which have been around, many of those in India, in Indonesia, in Southeast Asia in general, often family-owned businesses, first, second generation, most of them bootstrap their growth and now are ready to actually have significant growth with a partner like us coming in. So this is really ultimately this understanding of the potential and the tremendous social impact we can have. Circular Capital launched its first fund in late 2019. We raised $106 million as a first-time fund, and really set it up in Singapore to focus on South and Southeast Asia. When we look at our LPs, as you see, we have here a couple of fast-moving consumer good companies. We have Danone, we have Procter & Gamble, Unilever, we have Coca-Cola and Pepsi-Cola, but we also have the chemical companies like Dow and Chevron Phillips, CP Chem. Because that industry being so new in a sense from a institutional investment perspective, we have a USAID or DFC guarantee, which does de-risk our loan portfolio by providing a guarantee to those investments. So from an investment perspective, we can do equity, debt, convertible. We're quite flexible. We do on average between 2 and 10, but we can go all the way up to 15 million over several rounds, and then really see over the course of the growth of the companies. It's a 10-year fund with a possibility to extend. To that extent, we also, we heard that earlier, you know, we are patient in a sense, but these companies have been around for a while. In general, they're revenue positive, the bottom line positive. What they now really need is the capital to step to the next level, to really produce the next generation of plastics products, and that in particular food grade, where there is a big interest. Our structural tenets of investing or to invest is really twofold. It's investments itself, capital market driven investments with a return for our investors. But we do also provide grants through different vehicles, because some of these entities need grants in the sense of, or we help them in really stepping up their corporate governance, in providing additional support in building their structures, etc. What is also key when we look at our investment opportunities is that the waste management and plastic or the plastic leakage we see is really a systemic problem, and we need systemic solutions. And so we cannot just say we cherry pick a couple of investments, but we need to look at it within waste sheds, as we call it, within larger cities, and see how does the entire value chain line up. And that means in collection of material, sorting, processing, recycling, manufacturing. And so we need to look at it very systemically. We obviously, for us, is key that what we invest in is scalable and replicable, either within that country, but even tech transfers from one country like India into Southeast Asia is something we're really pushing. And then obviously one of the key tenets for us is also unlock this co-investment, because ultimately it goes back to that capital gap we see, where we, in that context, have $106 million available, but we need billions to prevent this leakage into the ocean of plastic into the ocean and attract capital. So the unlocking of co-investments through other partners and institutional investors is really key for us. So
sorry to interrupt you, Regula, but if you don't mind, we're just running out of time now. We could maybe take some of these during the Q&A section. Is that okay? Absolutely, Kay. Let me just raise one more. Okay, sure. This is the final slide, and thanks for reminding me. I wasn't aware that I'm talking so long, but this is really what it boils down to. We need to tackle it in a very systemic way and build ecosystems and connect the dots. And when you see from the top to the bottom, we look at collection, sorting, processing, manufacturing, when we look at the circular economy of plastic recycling, and each of these investments address one part, whether it is within collection and sorting, that then feeds the material into processing, and then that goes into manufacturing of new packaging. And then ultimately, we also need digital solutions which address the traceability and transparency of that material flow through our ecosystems. Happy to then answer any other additional question and address some of them in more detail. Thanks so much. Thank you so much, Regula. The full presentation for Regula will be available on our website. And before we go into the panel session, I'm really pleased to welcome Thomas Tsao, who is co-founder of Gobi Partners. So Thomas, over to you.
Yeah, thanks so much. Again, I've got a tough act to follow. 3 amazing panelists before me, and then great presentations in the main session. Like everybody else, I also want to thank Capital Markets Malaysia, MSFI, and Ernst & Young, of course. So again, I think this is a great discussion to have. Let me just give a quick overview of Gobi, and then again, I really echo what all the other panelists have said. A little bit about us. Again, I am dialing in, calling everyone from Kuala Lumpur. Our Asia headquarters are in KL. Gobi was founded in 2002. We've been in the business now for 19 years. We've grown our presence originally from China. We started off in Shanghai, grew out to Beijing, and then kind of expanded across Asia. You can kind of see our footprint here in this slide. We're in 13 locations. We have a team of 71 professionals across all of our offices, 1.2 billion US assets under management. We've got a portfolio of over 270 now early stage startups. On average, we're probably evaluating and receiving business plans, about 1,000 new business plans a month. So on a yearly basis, it kind of dipped during COVID, but we're looking at about 10,000 new startups a year. Next slide. Gobi, again, we're a venture firm focused on the traditional kind of digital sectors. So again, we've been investing across kind of AI, e-commerce, fintech, logistics, marketplaces. For example, in Malaysia, like Carsome is one folks probably have heard of. You know, we're investors in media companies like Day Day Cook, one of the largest cooking channels in China, social commerce. We're in drones. We're in autonomous driving, AutoX, which is just joined the ranks of the unicorns. And recently, you may have seen one of our exits. We sold our augmented reality company. They're a display manufacturer, Wave Optics, based in the UK, to Snap. So traditionally, we have covered a broad spectrum of the tech sectors. But why are we here talking as part of this panel? And I think the answer is very simple. Next slide. Gobi, a couple of years earlier, we had the recognition that ESG is going to be embedded in everything that we do. I think COVID has only reinforced that. I think COVID, at least for me, was a huge wake-up call, which is that we are all on the same, spaceship, so to speak, right? Spaceship Earth. We've got to be pulling in the same direction. If one part of the world suffers, we all suffer. So for us, there's been a renewed commitment to ESG, something we were doing before, but we are all in now. Just to give you some examples, we've now signed on to the UN Global Compact. We've been just admitted, we are a participant. We're very happy about that. We made an early commitment to supporting female entrepreneurs and women-led startups. We were one of the first VCs to pledge 50 million to Beyond the Billion, run by a friend of mine, Sarah Chen, based out in DC, also from Malaysia. We are now tracking the amount of startups that have C-level positions led by women or women co-founders or women founded startups. So that's something that's becoming has been and is even more important for us going forward. In the ESG on the social part, another area we've seen where, again, there's been a tremendous, I think, untapped opportunity and underserved market has been, supporting entrepreneurs who are focused on Muslim consumers, businesses, and communities. We've termed this framework, this investment framework, we call it Taqwa Tech. And again, we've been an early advocate of this. You can see we've now raised about 300 million US to focus on, across our different funds, to focus on this Taqwa Tech opportunity. And you can see some of the companies that have come out that have been already very successful. And then going forward, the third component is obviously environmental, right? So Len, if we can go to the next slide. Environmental, and I think, again, what all the other panelists have said, we're big believers of that, right? So within Gobi, we have now set up an ESG task force. It's led by my colleague, Su-Wei Shaw, based out in Singapore. Other committee members include Dan Chung. Again, we brought in an ESG advisor, Paul Ark, who I think many of you may be familiar with, Tariq, Shannon, and then Carlo, based in our Philippine office, actually is heading up our circular economy practice. And so again, this is something that we're taking very seriously. We need to do more, I really I listened with great with interest and also admiration for what the prior panelists, the three of them, were doing. Gobi is committed to joining the fight, and I think for every venture capitalist on this call, you know, it's not just, you know, it's not doing good. It's necessary. Everything that we do has to be evaluated, I think, through an ESG framework. When you look at some of the early sectors we were investing into, sometimes I think to myself that, you know, we've been part of the problem as well. VCs have made a lot of money investing into e-commerce, food delivery companies. And as Regula was saying, you know, they've been very, very successful, but especially during COVID, if you're like me sitting at home, you know, I make an order on Lazada, boom, you know, a couple of days later, my package comes, I pull out my USB drive, and the USB drive is this big, you know, but the amount of packaging and waste that's generated is incredible. You know, I go to our portfolio company, Deliver Eat, and I order food, and it's great. And, you know, 10 minutes, it's here. You know, but the plastic bag, the ketchup packets, right? The plastic straws, all single use. And while it's very convenient for me, how much waste are we generating on every order? So these are questions I think that every VC and all of us, also as consumers, need to start thinking about. This is a big kind of strategic shift internally for us. And I think, again, we did it without knowing the numbers that E&Y presented. But I think this is the right thing that we all need to be doing. We certainly feel that. And I'm just great to, I think, see and hear the validation from other panelists. But this is something we're very, very much committed to. We go to the next slide. Just to give some examples, and again, you know, a couple of the investments we've made already, two of these are from the Alibaba Entrepreneurs Fund that we help manage. One is a company called EcoInno. They are developing a biodegradable, compostable material to replace plastics. They have been in discussions with a number of the airlines, and so I hope coming soon to you on your next airplane flight, a lot of those trays, the forks, the knives, all of that will be supplied by EcoInno. So they've been working very hard during COVID to perfect that material. Another example of a company we're investing in the circular economy is a company called NTRAC. And what they are doing is they're an energy efficiency management for all the buildings. Their clients include Hong Kong Stock Exchange, New World Group, Sino Group, the MTR in Hong Kong, Nanfeng. So, you know, I think this is also a great opportunity, you know, reduce carbon. Co-investors on this include China Light and Power, the big utility company in Hong Kong. And other deals that we've seen, again, that we're actively tracking. I look forward to the opportunity to work with some of the other partner funds that are on this panel today. I'll just give you some examples. Just in Malaysia alone, we've looked at a company that's focused on developing rice straws, right, to replace plastic straws, a company doing solar panel installations. There's a company, Regula, that's in Malaysia focused on plastic recycling. We've seen another company here that's focused on electronic waste recycling. Another interesting company based out in Indonesia is focused on producing vegan leather made out of mushrooms. And again, in China, we were an early investor in EV charging stations, right? In preparation for the development of electronic vehicles, you need the infrastructure to charge. So these are some examples where Gobi's been invested. And again, for MSFI, we've made a commitment that we're going to invest into 5 sustainable startups this year. We are on track to do that. And for me, I look forward to the panel discussion now and answering any of your questions. So Navina, I'm finished here. Thanks.
Thank you so much for that, Thomas. So, ladies and gentlemen, I'd like to now bring on Zalina Shamsuddin, General Manager for Capital Markets Malaysia, and welcome back Regula, Faris, and Dr. Bo. And Zalina, the floor is all yours.
Okay, thanks, Navina. Thank you everyone for that
really good discussion. I think, Thomas, I'm going to start the conversation based on a comment you made just now about, you know, all your home deliveries and stuff like that. In terms of what you've mentioned is what we need to do as individuals, our role as citizens of the world. But what I'd like to sort of put the question across is, what about your LPs? What about the institutional investors that you're reaching out to? How many of them have integrated ESG elements in their search for value? And I'm going to start that question with Regula, please. And then Regula can give us a regional view. And Thomas, I'd love to hear your view from a Malaysia point of view, because I know it's quite nascent here. Regula?
Yeah, great, Salina. Thanks so much. I keep it rather short. Our investors, as you seen, are corporations, and they all have a very clear sustainability targets, and they all committed clearly to targets in respect to recyclable content in their packaging. So they're key driver of building the necessary infrastructure, which is required to bring that material back into the circular economy. So this is slightly different to when you have other investors, right, in or family office, etc. So their target is really environmental impact, social impact, by creating jobs, by making sure that it is a fair and equitable, opportunity for everyone, and also drive the setup of this very systemic approach. They're ultimately the one who are the off-takers of the material, so they're key. But they're also key in that partnership with us and with our companies to drive design development, because ultimately we also not just need to recycle, we need to change the way we design packaging, and they are at the forefront to do so. So that's really their role, and their role is really it's very strategic, this partnership, and it trickles all the way down to collaboration with our companies.
Thank you, Regula. Thomas, what about your experience in Malaysia?
Yeah, no, I'd love to talk to Regula more on this, because I think we share a common LP. For one of our funds, Unilever is also an investor. I think for our fund, when they invested in, it was really more access to different technologies and business models, particularly on e-commerce. And so I think that's actually an interesting, actually an interesting kind of a case study where big strategic LPs, right, we're investing into VC for one reason, but it's kind of evolved over time. And I think, Regula, what you're saying now is, again, when we talk to Unilever, they're obviously, big supporters and advocates of green going circular. What we're also seeing now is the trickle down from that, where we were investing into a lot of these food delivery companies, distribution, to sell more Unilever products. But what they're also saying now is, hey, when you're doing this, are there ways we can start minimizing even for a lot of the e-commerce companies? So I think it's getting all tied back together. And for what we're trying to do now is within our own practice is we're creating kind of, every one of us on this call, right? Dr. Bo, Fariz, we all have to write kind of LP, semi-annual, quarterly, annual reports. We were kind of encouraged, and we've built it in now as well, is within all of our annual reports, our reporting, we add an ESG component for every company, at least to inform them that this is something we're starting to track. And then B, it's something we're also reporting back, because there is that interest from LPs to see what, even at the startup level, what are founders and entrepreneurs doing, right? To be, more to be more protective of the earth, right? And so I think these things are happening.
Okay, thank you, Thomas. Sorry, I'm going to switch off my video because my Wi-Fi is a bit dodgy at the moment. So on that note, Dr. Bo, can I then ask you, in terms of impact investing and responsible investments in the private markets place in Malaysia, it's quite nascent in that sense. So could you just share with us, what is the major difference between responsible investment and impact investment from a methodology and from a disclosure point of view?
Sure. I think there has been a lot of terminology sometimes get people confusing, from ESG investing, responsible investing to impact investing. I would say there is one probably key difference. One really is how proactive are you trying to drive a change? That's probably, in my view, the big difference between ESG responsible investment versus the impact investing. We have been seeing many of our peers doing ESG investing, use it as a more screening tool, as a risk mitigating tool, as also ESG reporting to their LPs and so forth, which is actually fabulous to see that the trends happening. But impact investing take this to another notch. That essentially is in our fund document. That when we pitch to our LPs, we tell them that if we cannot find a sufficient ESG impact for this potential investment opportunity, we are not going to make investment. That's one. Two, we are going to be a significant shareholder of this non-listed company. And as a board member and shareholder of this company, we will drive them to make more impact as well from this company's practices, which is why we started as a private equity firm to own somewhere around 10 to 30% of those companies, and then with a very strong governance rights. Because from the very beginning, we tell these portfolio companies that we are impact investor. That means something. That means you also have to work with us in implementing a lot of system in your portfolio company's practice. So that certainly is a much more proactive efforts that you are doing with your limited partners on one hand, with your investee companies on the other hand. Granted, this practice itself is limiting sometimes. There are opportunities can be very interesting, and then maybe talk a certain way, but we did a quantification of whatever ESG impact. We look at that, we say, sorry, this is insufficient from an environmental risk reward perspective, and we just have to let it go for that portfolio, for that potential investment opportunity. And so I think at the end of the day, the most important thing for my peers here, wonderful presentation as well. The most important thing for all of us is really the fiduciary duty, because that's what we are. We are fiduciary duty responsibility for our limited partners. So whatever we do needs to be aligned with the limited partners. So yeah, I think if you want to become a ESG a responsible investor, and I think many people, many LPs are looking forward to that. That involves all the disclosure, all the negative screening, all the reporting and so forth. But if you want to move another different notch to impact investing, make sure that your LP will be okay, that you will forego some of those opportunities. Make sure that your LP will be okay, that you will use your shareholder as a power to drive the portfolio companies to further enhance their performance, and then being able to quantify those performances.
Thank you, Dr. Bo. So I think in that sense, the private markets space probably suffers from the same challenges that the fund management, the traditional fund management space had about 10 years ago when they started on responsible investments, in terms of getting the right talent and getting the right, putting together an ESG team that really understands what to look for in investment methodology and also shareholder advocacy. So that would be an area that the audience will need to sort of invest definitely to sort of move in this direction. Fair statement?
Absolutely.
Yeah, thank you. So Faris, there are a few questions in the Q&A, but I wanted to ask you one question specifically, whereby when you were talking about the kind of portfolio that you're talking about, which is startups into new technologies in life sciences and stuff like that, given the fact that private market is generally an illiquid secondary market, and you're talking about new technologies which are very, investors don't understand them, shareholders don't understand them, and based on our experience in the renewable energy space, do you think this increases the risk and therefore deters LPs and general partners to go in this direction? And what advice would you give for those who would want to try?
Yeah, so one is I would agree with you, and although times have changed a little bit, right? So so for us, we invest in the healthcare side, and when we do an investment strategy, we do look at where are the pain points. One, we lay that against where are the bigger companies hungry for in terms of innovation, because that's where you can see an M&A kind of a situation. And on the healthcare side, I think you see a lot more of it. In our weekly meetings, where we look at every single, not just the deals itself, but just have a look at what's going on in the world. Obviously, healthcare, there's a whole bunch of things happening every week. They're a bit more illiquid when it comes to the ag side. So it is, as you said, a little bit more risky. But what we found is that increasingly the awareness have changed and in the right way. So there is more activity that's happening with the ag side. So we have within our portfolio companies, remember they're early stage companies doing raises of 500 million around, and it's just unheard of and this is during the pandemic, right? Because typically when you have an early stage company, you're thinking about dry well, you're thinking about how times are tough. In answering your question, there's heavy likelihood those companies won't survive, right? And they'll be reaching the dry well. But it's really surprising because we are seeing quite a number of these companies seeing raises of again 500 million, and the specs market is I guess maybe a little bit shaky now, but a few of our companies seem to be getting interest from some of the institutional investors as well. So yes, I think to be fair, some of the points that you raised is fair, but increasingly I'm finding that the other thing is valuations, right? Because when we look at this on as an indication where things are, and again I'm talking about healthcare versus ag and industrial, because that's kind of where the space that we look at, right? So one is volumes of the transaction and the other is valuation. So industrial was like trading at 0.5 times EV revenue for God knows maybe a few years, and then of late I'm looking at the multiples. Gee, they've exceeded the ag side, and obviously pharma and medtechs at a different level. But the point is we are seeing that change. Now, whether it's a case of when you look at the UN landmark study, and effectively a lot of these things that we're seeing in terms of targets are effectively trying to target the 1.5 degree type pathway, i.e. the 50% in 2030 and then 0 in 2050, right? Practically all the countries and companies, the shells of this world are looking at that. Well, we are getting closer to 2030, right? And we're already at 1 degree. So 1 to 1.5 is kind of, and increasingly people are feeling literally the heat, right? You're feeling, gee, it's been a hot day, and so I think that's really hitting home in terms of this is something you just can't ignore. That's just a sense that I get.
Yeah. So far as talking about your pipeline of potential issuers, do you find that you get this pipeline? Do they proactively reach out, or is this mostly from your research and sourcing?
Sorry, the pipeline of deals? I didn't catch that.
Yeah.
So the pipeline.
Sorry, my wife.
Okay, if I hear correctly, there's a pipeline of deals that, well, I think the more and more you work on it, you kind of become more known that us would be more interested in, and it's a combination of that, a combination of the network that you've built, how you've looked at things, and then you get I think there could be maybe less than a dozen where reliable sources of kind of great deals that we kind of rely on, and they can be a continual source of a pipeline of deals. At least that's the situation with us, and I suspect it could be the same with the other panelists too.
Okay.
So yeah.
Thank you. So I have a question here which I think is relevant for both Thomas and Regula. The question is, how do you collaborate, or how do you include a lens for or provide a special allocation for women or take into account gender when you're identifying your potential investees? So Regular, would you like to start, and then Thomas can answer?
Yeah, we do have a gender lens aspect to our investment opportunities and our approach of investing. And the one case I wanted to share was with Treaty Oasis. It's an Indonesia-based female-led business who invests in the recycling industry. The majority, though, in this industry are males, but definitely I think we do make sure and want to make sure that there is more and more capital going into women businesses. Because also in reality, when we look at the informal sector, is a key stakeholder of the recycling industry, there are also a lot of women in there. And so generally, I mean, there is the need to boost that. And while we don't have it at the forefront of the way we look at things, it is part of who we are. When you look at our investment management and the team itself, it's also very balanced. It's generally a way of how we what we believe in and operate in.
Great, thank you. Thomas?
Yeah, no, I think I agree. I think what Regula says for Circulate applies to what we're doing here. And I also think, particularly since we're based in Malaysia, when we look at the Takwa tech sector, again, I think, venture capitalists, I saw it firsthand, when I started off back in the early 2000s, when we were taking some great Chinese startups back to the Valley to raise money. It was difficult for them to get funding because at that time, Chinese entrepreneurs, kind of the way they dressed, the way they spoke, their haircuts even, it just didn't fit the image of what a successful entrepreneur looked like for Silicon Valley VCs. And I just think, and I saw that firsthand. So one of the ways when we started early back in Gobi was, we were going to try to raise money from Silicon Valley. The first thing we did was we took our entrepreneurs and took them on a shopping trip, so they could wear khakis. They weren't wearing the black suit with the kind of the shiny leather shoes. You just gotta, it's unfortunate, but we all have I have biases too. I mean, I'm trying to recognize what they are and make sure, right? But it's hard to eliminate. Once there were guys like Pony Ma and Jack Ma that made billions of dollars, all of a sudden venture capitalists in the Valley could go, oh, so if somebody looks like Jack Ma, they can make billions of dollars, right? So once you get that change, all of a sudden you can, and we've noticed the same thing. I've been in the US where we talk about, hey, we've got some great Muslim entrepreneurs. And the reaction sometimes is when you play word association, when you say Muslim, what's the first word a venture capitalist will think of in the Valley? It's not entrepreneur. There's another word that may come up. And so again, that's something we have to fight against. But again, what it's going to take successes. The only way to change these kind of prejudices, biases, is to have, you need icons and you need success. Right. And that's where you got to roll up your sleeves.
Agreed.
And I think it's the same for female women-led startups. And you're starting to see those successes. I mean, people aren't stupid. All you need are some successes and everybody gets on the bandwagon. Right. But it's always those first cases that are the most difficult. And I think I admire what everybody's doing here is because, again, all these things around impact investing, it's difficult. But when there are those successful cases that come out, the ones that make the headlines and everybody's talking about, it's the early investors right here that had the vision to invest early that will get the reward. Because what everybody forgets in this business is if you want high returns, you got to take high risk, right? Every LP that I talk to is always looking for a shortcut. They want high returns with no risk. It just doesn't work that way. I've been doing this business now for almost more than 2 decades. If there was a cheat code where you could have high returns with no risk, everybody be doing it.
So would I, Thomas.
Right? I mean, that's the thing. You just got to work hard. And people got to take risks. And you know what the funny thing is? Every LP says they're long term, and then it turns out most of them are not. I'm sure the other analysts can agree, right? But I hope there's no LPs around here, right? But, Not all LPs. Some, most LPs are great. Okay, let me take that back. Right, this is being recorded, so.
No, you're safe with us, Thomas. Don't worry.
All right, I'm going to shut up now. Sorry.
So I'm sorry, we're sort of running out of time, but I have two questions, one for Dr. Bo and one for Faris, and then we'll have to wrap it up. Dr. Bo, one of the questions from the audience is, do you play a role in terms of engaging with government, and do you sort of play a role in shaping government policies in the areas that you tend to invest in?
Well, I think that's actually quite a challenging thesis to bet on. So generally, we are very much a market-oriented approach.
Very challenging, yeah.
We are very much a market-oriented approach for whatever we do. There is one general rule within the firm that if the investment memo, the return, has a base case that only works with the government subsidy, and my general rule as the investment committee head is, sorry, no. I'm not going to make that investment. So, look, at the end of the day, market force is the lasting driving forces that will be very, very critical for private equity venture capital firms to make a real money, a real return. That said, it doesn't hurt to have a proactive conversation with the regulator, with the policymaker, just so that people are aware how these factors are going to make the environment different, the people's life different. For example, for Regula's business, and then when China suddenly ban all the plastics, and that creates a tremendous amount of opportunities. And then certainly, we saw some of this coming. We try to, similar to many countries, and we try to stay very informed and to the policymakers, and just so that we can stay ahead of the game as much as possible, and then trying to also provide feedback from what we see from the market practices. So I think in both the US, China, and Singapore, we're always just very happy to see how the policymakers to take the feedbacks from the practitioners in the market, and then trying to incorporate as much as possible with a broader agenda into their new policy making. So that's probably my response, Navina.
Okay, thank you, Dr. Bo. You're right. I think climate change and social issues that we're facing today is something that we no longer should be acting separately, but the public sector and the private sector need to work together to make sure we meet the sort of goals that we want to achieve together. So the last question, Faris, is a question from the floor is, does Zariah Capital invest in VC funds with investment scope on early stage biotech and life sciences companies?
Oh, that's a mouthful. I.e., do we do a fund of funds? Is that the question? Well, we do. Sorry, go ahead.
It says invest in VC funds, so it could be a fund of funds, yeah.
Yeah, we typically invest directly. There's one of our LPs that has a flexibility of doing a fund of fund, but on the average, modus operandi would be invest directly into companies, i.e. venture stage or even growth stage.
Okay, cool. Thank you.
Yeah.
Thank you very much to everyone. We've overshot by 5 minutes, but I think the audience are quite happy with that because the content was extremely rich. I'm now going to pass on to Navina. Thank you very much to the panelists again.
Thank you. Thanks, Alina.
Thanks, Alina.
Thank you very much. Bye-bye.
Ladies and gentlemen, this brings us to the end of this webinar, and I'd like to once again thank all our speakers, Russell, Arina, Dr. Bo, Faris, Regula, and Thomas. On behalf of CMM, thanks so much for being part of this webinar. Now, before we end, I'd just like to say thank you to all of you for tuning in. When you click the Leave Webinar button, you'll see a very short post-event survey. It would be really appreciative if you could just take a minute to fill that up. And that brings us to the end. Thanks so much once again. Bye, everyone.
Cheers,
bye. Thank you.
Bye-bye.
Bye-bye.
Thank you. Thanks.
Bye.